Should you pay your taxes through tax withholdings or tax estimates or both? Has the schedule changed for 2021 because the tax deadline changed? Oh my goodness, tax estimates are terribly confusing. I'm going to help you make sense of them right now. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Corhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So right now, as I'm recording this, end of March, beginning of April in 2021, and lots of questions this year specifically about tax estimates. So I'm going to share some kind of perennials information about tax estimates so you understand it, but then I also want to speak to, right off the bat, has the schedule changed for this year? Let's answer that right now. They pushed the deadline for filing your 2020 taxes from April 15 of 2021 out to May 17th of 2021. They have not changed the tax estimate schedule though. They have not, and they've reinforced that a couple times. Will they change that rule in these next couple weeks? I doubt it. I doubt it. They're giving people an extra month to file their 2020 taxes because, oh yeah, that's right, they changed the stinking tax code right in the middle of tax season. Yeah, that's right. They changed it for last year. They haven't made any changes or whatever for this year. They're saying, listen, you still need to make your first quarter estimate on schedule April 15. So if you're going to pay tax estimates, sometimes these are called quarterly estimates, they do not line up with the calendar quarter. I think that's terrible. It's terribly confusing. I mean, and don't get me started on that. I just really disagree with how they've laid this out. But if you're going to pay quarterly taxes, you've got to make sure you're paying them on time, okay? And I'll explain more of that in a second. But those deadlines are your first quarter tax estimate is due April 15 of 2021, okay? So of that year, April 15. Your second quarter estimate is due June 15. That's just 2 months later, okay? So that's why I struggle with them calling them quarterlies, okay? So April 15 is your first one. By June 15 is your second one. Then September 15th, all right? And then you get all the way until January 15th of the following year. I get that one. You got to be able to see where the year ended and then give people time. But man, just start at April 15 and go every 3 months thereafter. My goodness, but it's not. April 15, June 15, September 15, January 15 of the next year. That's the schedule. Now, how should you pay your taxes? Do you do withholdings? Do you do estimates? Should you do both? So here's the deal. The IRS, the rule with the IRS, the underpayment penalties, all of that sort of stuff comes because the IRS wants their tax revenue when you earn the money. They want it when you earn the money. And they don't care whether it's withheld or whether you pay estimates. But listen, if you're going to pay estimates, you better pay them on time. Meaning, if you had a big source of income in the first quarter and you didn't have enough withholdings to cover that, and you're not going to have enough withholdings for the whole year, you better pay a first quarter estimate. Otherwise, there's a penalty. Yeah. But what if the big amount of income happened late March and I make an estimated payment in May? Yeah, that means the income was in the first quarter and your estimated payment was in the second quarter. No good. You're going to have a little bit of penalty there if you don't, handle other things right. So the IRS wants their income, wants their revenue in the quarter or when you receive it, basically, when you earn it, all right? If you're doing withholdings, so withholding from your income, from your job, or withholding from an IRA distribution, withholding from your Social Security, withholding from a pension, something like that, that's fine. As long as your withholdings cover all the tax that you need to cover, you're in good shape. Okay, fine. Then it really doesn't matter exactly when you pay the withholdings in. As long as you have enough withholdings throughout the year, you're in good shape. It's just when you now have another source of income or a big capital gain or a big withdrawal from an investment account, something like that, if you're supposed to then start paying quarterly and you don't, you only pay one of the 4 quarters and it didn't line up with the quarter that you had the income, that's where there's going to be a problem, okay? So I've got a few tax planning tips for you when it comes to doing tax estimates. The first tip is I personally would do anything that I could to avoid estimated taxes. And this is, if you're watching this right now and you're like, I've been doing estimated taxes for years, or I need to do estimated taxes, don't ignore me just yet. I'm just saying, for those of you that have a choice where you could withhold or you could pay estimates, it's much easier to do withholdings. I've just seen this through 20 years, and each year, thousands of people doing taxes, and just the whole process of having withholdings and quarterly estimates, it is just confusing, okay? So to me, I look at, if you have the opportunity to just withhold enough income and ignore and not do estimates, then that's tip number one. I've just seen enough people where, well, the cash flow, I actually had the income in this quarter, but I didn't have the cash flow until the next quarter, so I paid it then, and now I've got to pay a little bit of penalty. And number one, I want you to help avoid those penalties. And number two, avoid the distraction. I mean, I'd rather focus on other things than worry about that. So that's tip number one. If you've got the ability to get all of your tax payments paid in through withholdings, I would do that, because then you don't have to worry about making sure it's timed up with each quarter. You don't have to worry about April, then June, then September, but then all the way January. You don't have to worry about any of that stuff. So to the extent that you have some discretion over how much is withheld from your paycheck, say you own a small business and you're drawing income off of it, I would consider withholding a whole bunch of tax off of that income, so that the business profits or whatever, maybe you don't have to do estimates, something like that. All right. So that's number one. Second tax tip is, if you're in retirement, okay, I would consider structuring your yearly, your lifelong income to have some withholdings on it, if you're going to have tax due on that for the rest of your life. So if your only income source is Social Security, you can actually probably ignore withholding tax on your Social Security, okay? If that's your only income source, the way the rules work, and check out another video that I've done about taxation on unemployment, taxation on Social Security, likely your Social Security is not going to be taxable to you. So you don't need to withhold taxes from it. But if you've got a pension, you've got other income sources, and you're drawing your Social Security, and so every single year your Social Security is going to be taxed, I'd consider having withholding set up from it instead of doing tax estimates, because you're going to have Social Security for the rest of your life. If you can reasonably expect that it's going to be taxable for the rest of your life because of the rest of your situation, I would just withhold taxes. There's an actual tax form, I'll link it below in the description, where you would actually fill that out and you tell Social Security office, go ahead and start withholding taxes. I don't believe they have it set up where you can make this election online. It's still a form that you have to fill out. So I'll link it below and you can do that. But then same thing applies to your pension. If you're fortunate enough to have a pension, make sure that you've got withholding set up correctly on that, because you're going to have that pension income for the rest of your life. Ideally, right? I mean, that's why you have it. That's how they work. And so if it's going to be taxable for the rest of your life, just set up withholdings so then you don't need to worry about paying in estimates. So that's the second tax tip, okay? Check the link below, or check the description for that link to your Social Security. So the third idea as it relates to withholding and tax estimates, if you're in retirement, okay? If you're in retirement and you've got other sources of income and you're not sure how much you should set aside or how much you should be paying in estimates, consider taking a withdrawal from your IRA, withholding all of it or a portion of it or whatever, a large portion, and so that you cover all your taxes for the year through a tax withholding from your IRA. And then, to the extent that you've got the cash, you've got the resources, you could always redeposit that money right back into your IRA and not have it be taxable. You can count it as a 60-day rollover. You took the money out, sent it to the IRS as withholdings, and then you put the money back in right out of your paycheck, right out of your bank account. Okay, doing so allows your payment into the IRS to be considered withholding. Therefore, they don't care when it happened. As long as it happened during the calendar year, you're good. Doesn't need to be lined up with income in the first quarter, second quarter. You don't need to worry about April, June, September, January. What day is it? Will this get there in time? You don't need to worry about any of that, okay? And tracking that. Just take just do your tax calculation for the whole year, your tax planning for the whole year. All right, I think we're gonna owe about 12 grand in tax, okay? Take 12 grand out of my IRA, send it to the IRS via all withholdings, 100% withholding, and then take 12 grand out of my checking account, deposit right back in my IRA as a 60-day rollover. Okay, you can only do one rollover total every 12 months. So you've got to be very, very careful as to when you do it and how frequently you do it. But if you're not going to do a 60-day rollover for any other reason, this is a great way to cover your taxes, cover the right amount of taxes, and not have to worry about estimated payments. So those are 3 ideas to help you manage paying in taxes via withholdings versus estimates. For those of you that need to do estimates, if those first 3 don't apply, now then the advice is just work with your certified financial planner, do tax planning so that you know the right amount to pay in for estimates each time. Should it just be a safe harbor so you're penalty free? Should you look at your income sources each quarter and make sure you're paying in the right amount so there's no penalty? Is there a different strategy? Work with your certified financial planner and do proactive tax planning to make sure you're paying in the right amount. Bigger than that though, make sure you've got the right tax payment, tax withholding strategy. And if those 3 ideas can help you get the right tax withholding done, you don't have to worry about estimates. Wonderful. All right. Work with your CFP on that. If you don't have a CFP, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or just send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.